Hello, good evening, everyone. Good to see every one of you here. My name is Alex from MarketWise Asia. As usual, today it is a Friday evening, but right now we have the World Cup and the quarter final is going on between Croatia and Brazil. So I'm expecting today's crowd will be a bit lesser because I think many people should be watching the Croatia match between and Brazil. Okay, I'm not sure. Okay, but thank you for staying with me and watching my YouTube stream and also my Facebook Live. Okay, and yeah, as I mentioned, as usual, this is a Friday evening, December. Okay, 9th of December. Very fast. We are nearing to the mid December, and Christmas is really coming soon. So if you can, once again, if you can hear me loud and clear, please say a hi to me in the comments, in the chat, wherever you are, whether you're on Facebook Live or you are on YouTube channel. If you're on YouTube, give me a like and also subscribe to our YouTube channel as well. Okay, so just say hi to me. I'm friendly. I won't bite. Okay, so yep, let me take a look at the comments right now. Hello, Juki, Kian Hui, Stephen, Wei Lun. Okay, Mark. Yeah, Mark, just now I was watching at 11 a.m., 11 p.m. just now, Singapore time. Okay, Singapore time. So yeah, I was watching just before I do my Facebook Live. And Pei Wen say, I am with you. Thank you so much, Pei Wen. Okay, Gilbert, polling, not watching. Why not watching? Watching the market more interesting, is it? Michelle, Yang, okay, SC, Keen, Yue Lam, HJ, William. Michelle, gotten used to listening to you every Friday night. It's as if I am like a pastor, preaching to you every Friday instead of Sunday. Okay, so thank you so much for being with me. Okay, so yeah, today I'm going to share with you market outlook. Okay, the market internals, and of course, as usual, the key sectors to watch and such. Okay, we started on time, so I believe there'll be more people who will be streaming in. Hello, CJ, hello, Lawrence, hello, Vivian. So, hello, Wilson. So, we'll just wait for a few minutes, okay, while I go through some of the content, okay? So, let me take a look. So, as I mentioned, right, so the S&P 500 has dropped below its 200-day moving average, and it's a key area to watch. And then I'll go through with you. So the market, it is growing more and more bearish as recession fears. So is it a short-term bottom, or is it a beginning of a larger trend down? Okay, just now there's also this PPI data, the producer price index data. So later I'll go through with you guys. Right, so let me share with you my screen right now. So as usual, a disclaimer first. I believe you guys can see my screen, right? So as usual, disclaimer first. Okay, whatever I share today is just for education and information purpose. It is not a recommendation, right, to tell you what to buy or what to sell. Alex could be wrong, so please don't copy me. So please do your own due diligence. And if you're watching this right now, as of now, we have more than 100 people in the room. Okay, please give me a like, share, or comment. Okay, give me an angry face, fine as well. This is just to tell Facebook or YouTube that you want to engage with me. And so next time, whenever there's new posting or whatever it is on my Facebook or YouTube, okay, you'll be able to see the content on your feed. Because if you don't engage with me, Facebook, you deem that you are not interested with MarketWise Asia content. So just give me a like, okay? All right, share if possible. Thank you so much. All right. So of course, before I kickstart, okay, I think some of you might have already registered. Okay, so the Market Insights Virtual Summit, once again, okay, it is coming up on the 14th and 15th of January next year, right? So pre-register now. So I'll show you the link. The link is like this. Okay, the link's already here. So I'll post the link in the comments and also in the chat box. All right, so let me post the link. Of course, 2023, new year, new outlook, new opportunities. Okay, we'll be gathering. As usual, we have the resident speakers like Jay and also new speakers as well. Okay, to give you the investment and trading knowledge and also the market outlook as well. Because it's the start of the new year. Many investors, including myself, okay, want to hear some of the experts. Okay, what are their views on the new year? Okay, and of course, the keynote speakers for this event. Okay, it is Ray Barros. Ray Barros is a professional trader, fund manager, author, and educator. Okay, so it is free. All right, so there's nothing to pay. So just head over to the link and pre-register now. and first name, email, and mobile, you are good to go. And okay, the bonus reports and material I will send to you most probably by next week. So I've decided what to send you guys. I'm going to share with you the the seasonals, okay, for the first quarter of 2023. So at least you have an idea what to look at, okay, the key sectors, okay, the industry to look at, okay. So at this moment in time, okay, the market, it is still slightly bearish. So let's say, for example, if the market is going to go up, okay, in 2023, at least the first quarter, what are the key, sectors, you're going to look at. Just like, for example, center rally, that every December, that tends to be a period that the market based on historical data tends to go up, okay. Same as well, going into January, February, there are certain, sectors, industry, ETF that tends to go up every January and February. I'll send you this report and plus the bonus video to you. So please register this. For those who just joined us, I'll post the link once again in the comments over here. All right. So yes, all right. So Telegram channel sharing. All right. So this is the Telegram and the YouTube channel as well. So as I mentioned, a lot of times the time sensitive information I tend to share on Telegram, and of course, if you have new content, I'll post on YouTube as well. So for example, this is our Telegram channel over here. Okay, you can see that in fact last week during the last Friday, I mentioned about the VIX. Okay, of course, I also posted on the Telegram channel as well. In fact, this is actually on Twitter lah, but I also posted on the Telegram channel. Say I mentioned that the VIX, okay, previously, the blue star and red star previous signal, and once again, in fact, last Friday there was a signal once again, and in fact, this week, okay, in fact, the VIX do go up. In fact, the VIX does go up, but it didn't really spike to a level that I expected to see. But nonetheless, okay, the signal still remains valid. So if you want to get the latest, the kind of content, time sensitive, outlook data and all this, right, please subscribe to our Telegram channel and also subscribe to our YouTube channel. I'll post the link in the comments once again. Twitter, okay, this is my personal Twitter account. So once again, sometimes I have some personal things to share with you. All right, some trade ideas that I don't usually share on Telegram. So like for example, the reason why I share is on another ticker. Okay, just check it out. So this is my Twitter. If you want to subscribe, do subscribe to, just follow me on Twitter as well. Okay, it's up to you. You decide. Okay. All right. So let me post the link in the comments as well. All right. The insider calls, I believe many of you guys have already registered already. Right now, we have near more than 1,500 people who have registered for this course. This course is free, proudly supported by IG. Okay. So let me just go through very quickly. This is insider course to technical trading. It is free. All right, for now. So some of the things I'm teaching is not found online, also on in standard trading textbook. All right. So 11 modules. I won't go through with you. You want to see, take a look and walk through them. Some of the topics are pretty interesting. I believe not all content are found easily on YouTube. This is just based on my personal trading for the past 11 years. Okay. So once again, I'll post the link in the comments. Just use it just register in the comments. Okay. The link is in the comments over here. Okay, so thank you so much for bearing with me for the past 10 minutes. Okay, so I'll go through the topic in details today. All right, of course, before I kickstart the market outlook and all this, right, the PPI data, okay, just now actually before the market opened at 10:30 Singapore time, all right, I think is it 9:30, it came out. So the PPI data, right, producer price index, the expected was 0.2%, okay, but the actual was 0.3%. And before the market opened, the futures actually dropped. And right now, the market kind of recover a little bit, okay, and it's positive. By the way, ignore this trading view number. There's some error in today's number. You have to look at the SPY, okay. It is in fact slightly positive now. All right, so the market is slightly positive now. Okay, So of course, for those who don't know what is PPI, it's very similar to PPI, but it is looking at the producer pay and measure the change in sale price for the entire domestic market of raw goods and services. Basically, it's like the inflation for the producers, okay, to keep things simple for you. All right. But okay, I think the market kind of overreacted during when the news announced and when the data came out. It's just slightly above the expected 0.2 only. Okay, so let's go to the chart over here, this PPI over here. So the link I'll post, I think should be this one. Okay, yeah, correct. All right, so I post the link in the comment. So this is based on the index from the base number is 1982. So from this side, you see all the way up. Okay, so it doesn't really reflect the changes very well. So normally, you know, I would change it to year on year. All right, like how the CPI data is presented. It is based on year data, right? Correct. So you can go to this link over here posted in the comments. So just go to the edit graph over here. The units here, right? You can change from year ago index 1982 equal to 0. The base is 1982 lah, okay? So year on year, change from year ago, all right? And then should be applied already. Is it applied already? Yes, okay, applied already. Then just close it. Okay, so I do need the max historical data lah. All right, so I can just use for the past, 10, 20 years is fine. So you can see from here the PPI year-on-year data, okay, since the start of 2022, okay, it peaked in near June, okay, in June or May 2022, and then price has been starting to go down all the way. Okay, its price has been going down all the way. So I think the market, is a bit overreacting. And it seems right now the market, okay, it is recovering. All right. So if you understand what I'm trying to say about this PPI, changing it from the year on year, all right, okay, instead of the base number, right, just type PPI in the comment. Just type PPI in the comments. All right. Okay. Of course, this week, right now, just now was the PPI. I think the more important thing that everybody is looking at is, in fact, the CPI, okay, the core inflation data, okay, and also the core inflation that is happening on the is it on the 13th or 14th? Okay, I think it's on the 13th. Okay, 13th of December. That's next Tuesday, and then Wednesday 14th it is the Federal Reserve meeting where they will announce the hiking rate, whether it's going to be a 0.5% or 0.75%. Okay, so of course PPI, I think it is very clearly it is coming down now. Okay, it's coming down. Okay, I think the market is overreacting over to the little bit of upward movement. Of course, the key thing is whether the CPI can continue to go down. Okay, but of course, I'm not sure whether it's anybody's guesses, but I believe, okay, the CPI, it is going to go down because, judging from, as I mentioned, like CPI previously, I mentioned CPI is a lagging data, okay, lagging data. So if you look at the commodities like crude oil, for the past, 1 month or so since November, all right, it is also dropping like a rock, okay, like a rock. Natural gas and all this is also like a rock. Okay, it's dropping since November, like a rock. So I believe the CPI will continue to drop. Of course, not until 2 to 3% that kind of level lah. But of course, how the market react is another different thing. Okay, so I'm not going to anticipate how the market is going to react, but I believe the numbers should be better than the previous round. The previous one is, I think, 7 point something percent. I forgot already. Okay, all right. So all right. So and then yeah. Okay, so this is one to talk about that, and then the Federal Reserve hiking, right? So I mentioned these two before. So just want to recap once again. I think 0.5%. It is. I think it is there, okay. It is there. Okay, so this one. Okay, so yeah. So current rate is 3.75 to 4%. Okay, so the 50 basis point, okay, it is, which is 0.5% hike. Okay, 50 basis point BPS. Okay, it is about 80%. So there's an 80% chance that the Fed will hike 0.5% next week. Okay, so I think this is, I think it's sort of a done deal. Okay, whether it's go up or down, whether the inflation is they are going to do 0.5%. All right. Okay. Thank you, Yang. The previous round was 7.7%. So okay. All right. So I believe it will go down a bit lower some more. Okay. This is just my personal view over here. Okay. So once again, if you are just joining me, just can you give me a like, share, or comment? Okay, I appreciate that very much. All right. So this is go through the PPI already. Okay. So okay. Now, okay, once again, right? I mentioned that before. Okay. Now I think it's on the 2 days ago, right? The equities put to call ratio spiked against to the highest. Okay, which means that put to call, right? This ratio means that if a lot of people is buying puts, right, then the number is very high, right? Then you spike. So if you buy a put options, right? If you buy put, you are expecting, okay, the stock market to go down. Okay, so this is like a contrarian indicator again. So let me show you the chart once again. Okay, so yeah, I got this from Twitter. I got this from Twitter. All right, so once again, this is the CBOE. All right, put to call ratio over here. Once again, it spiked to 1.46. Okay, spiked to 1. Okay, the number doesn't really matter. It's just that I can see that again, it's the highest. Okay, highest. All right, compared even to the way before that. Okay, so it's the highest. All right, so if you want to know how to get this number, which I mentioned before, also you can go to stock chart. Where is it? Okay, CPCE. All right, CPCE. Just key in CPCE. Okay. All right. Can you see that number is also 1.46? Okay. Again, okay. How are you going to view it? It is, to me, it's like a contrarian. It's like the market. It is still very bearish. Nothing wrong with being bearish, but okay, you need to understand the psychology behind this kind of extreme level. So imagine all the people who are already bearish has already, bought the put, and those who are already very bearish all have shorted. Okay, who is there to short some more? Okay, so you can treat it like a contrarian. So most of the time the masses are always wrong. So it's at an extreme. It is at an extreme level. Okay, so like Tim Lee is asking, right, what does this mean? You can treat it like overbought or oversold reading. Okay, you stretch it like a rubber band. Okay, everybody is so bearish. Okay, then the reverse normally might happen. Okay, again, is it really true? We don't know. So we still have to see the price action as well. But generally, okay, the sentiment right now, okay, we can treat it as this way. Okay, the sentiment right now, the market, it is still very bearish. A lot of people are still inclining for a short. Okay, all right. If you ask what does this mean, it means that most of the time people are always wrong. The masses are always wrong. They always long at the wrong time, buy at the wrong time, short at the wrong time. Okay, when it is okay, I think a very good thing to mention is like, for example, China. Later, maybe if I have the time, I'll go through a bit of China. So I'm not sure about you. Okay, I think at one point in time, I think just a few weeks or one month ago, all right, the Western media are saying that China are uninvestable. Okay, China are uninvestable. Or is it a bank? Is it China uninvestable? China is uninvestable. Okay, okay, JP Morgan or Bloomberg describe. I think okay, I think just a few months back. Okay, China uninvestable. So everybody, even the big boys, I'm not sure whether they're out to fake you or what. They say China is uninvestable. So what happened to the Chinese market recently? What happened to the Chinese market recently? Okay, everybody is wrong most of the time. Okay, most of the time people are wrong, and the market just Hang Seng Index just staged a very strong rebound. So you need to be beware of very extreme sentiment. Most of the time, that is a signal that that is a capitulation. Okay. All right. So that's that for that. We go through with that. Okay. And then okay. And another one to share with you, right? Yeah, from Twitter as well. So recently the volatility is down. You can see that recently that the VIX, okay, the VIX, okay, the VIX was down, right? Volatility is down, okay, volatility down. So you need to know that VIX and the stock market is inversely correlated, which means that this is the VIX is a fear index, right? Commonly known as the fear index. If there's a spike, okay, which means that the fear is high, the market will come down, high volatility, okay, inversely correlated. Big spike, okay, the stock market will go down. Okay, all right. The bigs come down, generally the stock market will go higher. All right. So it is true. It is true that recently the VIX has been coming down, so the volatility has kind of subsided. But okay, it is not at a level associated with sustainable uptrend. I will share with you what does this mean. Okay, so I got this from Mark Minervini from Twitter. So he is a very well-known trader as well. So I'll put in all this chart first over here. All right. Okay, so this is this one. All right. So okay, so you guys can see the chart over here, right? So okay, so this is the first chart over here. This is the S&P 500. Okay, the top chart is SPY S&P 500. The bottom is the VIX. All right. Can you see that over here at the top, okay, there's a at the bottom, over here, and then normally, you know, it is at a high ratio, high number over here between 20 to 30, so it's still at a elevated level. So at about 30 plus, it is the one standard deviation. The market is still at a fear level. Okay. So this is what it means, okay? We are still between the 20 to 35 level, okay? Between the mean and the one standard deviation, okay, for the VIX, okay? All right, and then, where is it? Did I not show this? This is number 2. I didn't put number 2. Okay, this is the number 2. Okay, number 1 is over here. All right, so sorry, I'll go back to the first one first. So S&P 500, you can see that the top is S&P 500, the bottom is VIX. You realize that what Mark Minervini is going to say is that, you know, whenever there is really a sustained bull market, you can see that this is the bull market, right? Generally, okay, the VIX stay below the mean level, which is about 1920. Okay, can you stay below 20? All right, there's a sustain from 2012 to 2018, that kind. Okay, the VIX stay below the 20. All right, over here in between 2017 to 2020, okay, the VIX also generally stay below 20. But right now, we are still staying at a elevated level over here. Okay, all right, so this is typically, you know, when it is in a uptrend, stay below 20. Right now, we are still not at that level yet, which is marked by over here. Okay, so going back to history, the .com crash, you'll see that when it is still in a downtrend, okay, in a still a bear market downtrend, the VIX stay elevated also between the 20 to 40 level until the bear market is really over. Okay, all right, kind of ping pong over here, and then the bull market starts the start of a new bull market, right? Can you see that the VIX starting to go down way below 20, okay, 20 to 16 to 13 to 10, that kind of level. Okay, so what Mark is trying to say that right now, the VIX is still staying at this elevated. Hold on. The VIX is still staying at this elevated level over here. Okay. All right. So 19 it is the 19 is the mean. All right. So 27 it is about the one standard deviation. Okay. 1SD, and about 35, okay, is the two standard deviation. Okay, this is the fear level. So we are still elevated, the VIX need to go down some more. Okay, if you can understand what I'm trying to say on this, okay, just type VIX in the comments. Right. Anyway, by the way, if you guys know the updated score of between the Croatia and Brazil, just engage me, type in the chat box, let me know the latest score if there's any scoring, okay? All right, so if you understand what I'm trying to say, just type VIX in the comments. So when it's asking, VIX, does the VIX respect the yearly pivot? I don't really go and I didn't really go and check it out, but I don't think so lah. Okay, I don't think so. So if you put in the VIX, you can just add in and see lah. Okay, so oops, not this. This. You see, it is just ping ponging at the yearly pivot lah. So I don't give too much weight on that lah. So it is like a mess. Okay, so I don't really use the pivot points on VIX. I don't usually use the pivot point on VIX. Okay, so I hope that answers your question. Doesn't mean that it is not useful, but if you find anything useful using the VIX and also on the pivot point, do let me know. It's just that I didn't really research on that lah, because I find that can't really tell much of a difference. Instead, I rely on my proprietary indicator, right? Okay, so I'll go through this right now. Okay, so anybody remember what I mentioned about the VIX last week or not? Anybody remember or not? Okay, the star signal. Anybody remember? Okay, entertain me. If you know, just talk to me. Okay, anybody remember about what I mentioned about VIX last week? Quite June, right? It is pretty accurate, right? For those who missed it, okay, so there are different signal, okay, the blue and also the red signal over here, okay, based on different parameters. Okay, not important. Okay, don't ask me how to get the star signal. This is proprietary, so this is not an indicator, because I just put the star using the icon only. Okay, using the icon only. Okay, so I can move it around. This is not the actual indicator. Okay, I'm just putting the signal where it used to appear. Okay, you can see that previously, whenever there's a blue star signal, okay, different parameter, big spike. Okay, of course, it doesn't work all the time. This time around, it doesn't. The blue one doesn't signal the absolute the top over here. Okay, but then the red signal came in, and this is the spiking. Okay, sometimes the red and blue come together, and then there's a spike. Okay, sometimes the red doesn't work as well. Okay, sometimes the blue works better. So all in all, okay, there are different parameters. So last week I mentioned that this another red signal is coming in. Okay, another red signal is coming in. So I mentioned that potentially this week is, of course, the 5th of December week until, of course, 9th of December this week, or even a few weeks later. Okay, there could be a potential spike. Potential spike, okay. All right. So I think this signal still work. Okay, it is working, although it didn't really spike like the previous signal like that. Okay, pump all the way. That's the market still didn't really go down that much yet. But okay, you need to be aware that next week there is the CPI and also the Fed meeting where you announce the interest rate, right? So we won't know how the market will react. There's a potential that the VIX will spike again. Okay, which means that the market will crash or sell off. Okay, we won't know. So we will see how it goes. You realize that whenever the signal appear, okay, it will take quite a number of weeks. A few weeks. Okay, this chart is in days. All right, so it takes a few weeks to play out. So we won't know how it goes. But for me personally, okay, in fact, last Friday after my Facebook live, okay, I in fact went to the long VIX. I went to long VIX using CFD, using the forwards contract. So decent profit. So it went up. Okay, even though I expect a spike, but it didn't. But nevertheless, it's still a good profit. So I've exited the long VIX position. Just to let you know. Okay, or I didn't short the stocks. I just long VIX. Okay. All right. Can so as of now, this signal is still valid. Let's see how it will play out in the coming week or so, next week. All right, if everything's okay on this, okay, just type okay in the comments. It's getting a little bit quiet in the chat box. All right, so last week, quite good, right? Quite accurate, huh? Anticipate it is happening, and indeed it happened. Okay, the VIX went up over here. All right, so as I mentioned, Don, so there are a few ways you can trade the VIX futures, or you can use options. For me, I just use CFD and just buy the VIX forward contract. Okay, all right, use CFD. Okay, all right. Can yes, so talking about the VIX over here. Okay, so talking about that market breadth. Okay, this one key level first. Okay, let's talk about the market level first. Okay. So hopefully I can finish it before 12:30 today. So let's see how it goes. Let's see the market right now. The market today is not too bad. Okay, it is recovering. It is recovering. So again, let's go to the S&P 500. Okay, for those who followed me last week, okay, what do I say on the key level on the S&P 500 futures? Anybody can remember or not? Okay. All right. If you can't remember, go back to my last Friday Facebook Live. All right. I say that the key level will be 3960, okay, 3960. Okay. Joe is asking what is the CFD for VIX that you long. All right, I'm using CMC market. Okay, CMC IG. I think there is also. I'm using CMC market. Okay, I'm not endorsing any of the brokers. I'm just using that. For those using CFD, if there's the VIX, you can just long VIX. I'm using the January contract VIX. Okay, all right. Okay, so 3960, I mentioned that there could be a reaction at 3960 because it also coincides with the central pivot range and the pivot point. So right now, yes, can you see or not? Okay, so the market, it is, hovering at this 3960 level over here, 3960 level, and starting to rebound. Okay, of course, next week is the key week. All right, I won't know how the market is going to react on the CPI data and also the Fed. Okay, but right as of now, the market, it is supported at the 3960, and of course, 2 weeks ago I mentioned that for the Dow Jones, the 34700 is the resistance level. All right, and it will come down and it will drag all the indices down, and all these are based on the volume profile. So I won't go through that again. All right, so I will add in the usual indicator. Okay, that's the reason why, like for the S&P 500, that's the reason why. I think maybe there could be some new people over here, right? So normally, generally, I use the cloud and also the central pivot range. So generally, if price is above, okay, the Ichimoku cloud, okay, it is uptrend. Price below the cloud, all right, downtrend. And the green line here are the central pivot range, which is acting as a support zone. You can see that when the market, it is in a very nice uptrend like year 2021, okay, you can see the central pivot range is acting as a very nice support, all right, until price broke below the cloud and also the CPR, and it is acting at kind of a resistance, okay, until it's a resistance level over here, all right, and then until price went up above again. So right now, price, it is still at the central pivot range and also the 3960, the 3960, which is the volume profile. This is a high volume node over here. Okay, so for those who want to know, for those who are new to MarketWise Asia, you want to know how I install the central pivot range and such, right? Okay, you can just head over to the YouTube. There is this YouTube tutorial over here. Okay, so this is the YouTube tutorial on the cloud and the central pivot range. Contran 3690 准 quite 准 not too bad. All right, so you can see that I don't use horizontal support line. Okay, the classic people go and draw line. I don't really use that, even though I know what people are looking at. So this is actually what I am teaching in the course as well. Okay, all right, you know how to use the support resistance. Okay, don't draw lines. So this is inside the course as well. So if interested, for those who just joined or who don't know about this course, okay, so this course is here. Okay, all right, the insider course to technical trading, it is free for now, right? You can head over to the link over here and register. It is free. Okay. So Stefan is asking, when is MarketWise going to have a Discord group? These links and materials going to be a very good Discord resource. Wow, a lot of things to manage. So I have Twitter lah, Facebook lah, YouTube, and another Discord. I think I don't have the bandwidth to start another Discord group. And a lot of things I share, it is free. So I don't think right now I have the bandwidth to do another Discord. I will see how it goes. All right. Okay, thank you, Stephen, for your suggestion. Okay, so yeah, so the key level as of now, for the S&P, no change. For the Nasdaq, can you see that once again? All right, the central pivot range, the green dotted line over here, the 3 green dotted line over here, it is acting as a support area over here. Okay, so no change, like same as last week. So supported at the 3960, and then of course near term wise, okay, we are of course approaching this standard resistance over here, which is at about 4,000 4130, somewhere around there. Of course, it's the target is the next swing high lah, okay, the standard swing high over here. But what I'm a bit concerned, it is on the small cap over here. Okay, small cap, it is the Russell 2000. So previously I mentioned that the cloud flat support, it is a very strong support area, okay, right now. So indeed, okay, price do hover at the cloud support over here, and then price crash through, okay, and it is now below the central pivot range. All right, so which means that next week or so, let's say if price can recover, all right, then the central pivot range will be acting as a resistance. Okay, the small cap be acting as a resistance. So which means that the resistance level for the Russell 2000 small cap, okay, futures, it is at about 1850 over here. Okay, 1850, put horizontal line, 1850. Okay, which is the central pivot range. All right, which means that price come back down, go back to CPR again, might get resisted, which means that this time round, okay, instead of the Dow Jones, okay, affecting the all indices, all the indices, the Russell 2000 could be the one, as in making all the other indices face resistance as well. Okay, and then they come back down again, and then of course potentially dragging the indices like S&P, Nasdaq, and such. Okay, we will see how it goes, whether you pan out. Of course, the best scenario is that after CPI release data better than expected, and then price just burst up all the way. That's the best scenario, but we won't know if price continue to go up like that slowly within the Monday, Tuesday, right, or so, before the CPI data is released, then this could be acting as a resistance. So this is the Russell 2000 futures. Okay, Russell 2000 futures is RTY. All right, so if you understand what I'm trying to say, just type RTY in the comments. The resistance level is at 1850 futures. Okay, futures level over here. But of course, right now, at this point in time, just again, every week I'll do the same thing. Your consensus right now, at this juncture, right? Are you bullish or bearish on the market? Okay, again, don't need to talk until so long. Until the end of the year, or until the end of the year. Okay, so do you think the market, okay, will go down, or the market will go up until end of the year? If you are bull, just type bull in the comment. If you are bear, just type bear in the comments. Until the end of the year 2022. No need to go until so far next year. just until the end of the year, because a lot of people right now are focusing. Okay, before that, okay, people are thinking, wow, the bulls are back, you know. Then the best kept very quiet. Okay, because market keep going up, then the bulls kind of, you know, wow, losing the battle. Wow, is it really uptrend already? Lose the battle, you know, very quiet until recently for the past 1 week. Then the best, you know, was start to make noise again. The best start to make, oh, you know, I tell you already, you know, the market get resisted by the moving average, 200 days moving average. All right. Yang say bird is bull or bear, not bird. Okay, so go back to naked chart. Okay, I'll go back to moving average. Right. So another perspective over here. So this is moving average. Okay. So I remove this. I remove the 1, 2, 3, 4. Okay. So this was previously, all right. As I mentioned, right, the market go up, the bulls make very loud noises, then bears very quiet. Of course, starting initially, I thought the market will break above the the MA 200 the 200 days moving average, but then it didn't hold and price come back down. So the bear starting to say, hey, you know, it's come back down again. The market will make a new low again. You know, recession is coming. You know, and such. Okay, no bear market ever you know end before the recession starts and all this lah. Okay. Anyway, I take a look at the comment first. I haven't taken a look at the comments. So little comments okay. Can you interact with me or not? So Stephen, boo, small boo. Okay, a lot of boo, bear. Okay, beer, Thomas say bear. Thomas say beer. What is beer? Okay, can we say bear? All right, bear. So it is still a mixture. All right, so I don't know about you. So of course, right now, strictly speaking, we are still in a bear market. If you're just talking strictly about the moving average, we are definitely still in a bear market. Okay, price dropping below the 200 days moving average. All right, and previously I mentioned about the RSP, the equal weight. Okay, or equal weight. Okay, we are actually right now still hovering. We are still hovering above the 200 days moving average. So beneath the surface, okay, put equal weight in all the 500 companies, okay, all right, we are still okay for now. We are still at the 200 days moving average, okay, because the S&P 500, it is the biggest company and put a lot of weight on the biggest company like Apple, Tesla. Of course, recently Tesla been coming down, and it's like Amazon coming down also, not the best of the best, dragging down. That is why, okay, it is coming down, okay. But as I mentioned previously, I think 2 or 3 Facebook Live ago, we are for the equal weight RSP, S&P 500 RSP, equal weight, okay, we are still supported at the 200 days. All right, this is to give you a different perspective. Even though the market is coming down, we are still holding on above 200 days. Okay, for the equal weight, QQQ, definitely we are below, but for the equal weight NASDAQ, we are still hovering at the 200 days moving average, and it doesn't really do a very sharp dive. Of course, right now we don't know. As I mentioned, the key event is next week. Wow, very sweet, just before the Christmas, okay. And right now, you know, not the best time to trade. Also, if you want to trade, my suggestion is that you need to either get out before the CPI data is out, or before the Fed talks meeting. Okay. All right. The mid cap, okay, IJH I mentioned before. So IJH, the mid cap, okay, still holding pretty well above the 200 days moving average. You know, break above, retest again, and around is at above the 200 days. Okay, the small cap, okay, hovering at the 200 days moving average, ping pong. So we are at a critical juncture right now. Of course, if you ask me, okay, this is based on the 200 days moving average, but if you use on normally what I use to gauge the market, right, you will realize that, you know, I mentioned that, you know, the market must stay above the central pivot range for 2 consecutive months. Do you remember or not? Okay, for 2 consecutive months. So maybe I will switch this to just the CPR. Okay, so the market must stay above. Yeah, next week also got triple witching. Okay, a lot of these things are coming up now, so not the best time to trade. Okay, so must stay above the central pivot range for 2 consecutive months. So last month, first month, November was above the closing price was above the CPR, right? But this month, as of now, we are still below the CPR. So let's say, for example, okay, if December close below the CPR, okay, then not valid anymore. We have to wait for 2 consecutive month prices above the CPR. Okay, then I say that maybe generally we are really a change of trend. So right now still not. Okay, so for those who are new to me, okay, why 2 consecutive months? So this is just based on empirical evidence. Okay, looking eyeballing, can see that during the COVID sell-off, every time price above the CPR for 2 consecutive months, price continue for a rally. Okay, even for correction over here in 2018, 2019, above the CPR for 2 consecutive months, price goes up. Okay, all right, same as the previous one. Okay, I want to go through that. I keep repeating that very soon already. Okay, so need the price to go above for 2 consecutive months. So right now, still not above for 2 consecutive months. And if you add in the usual cloud, okay, just a recap, I think you guys should know. All right, so weekly time frame, okay, we are still below the cloud. So longer term time frame wise, okay, we are still in a downtrend. Okay, like what the normal people using 200 days moving average, we are below the 200 days. We are still in a downtrend. But from what I'm seeing, okay, the market do have some strength now. Okay, like the RSP one. Okay, all right. So we RSP on the moving average, we are above the 200 days moving average. So we do have some strength over here. All right, and if you are looking at the market breadth, okay, to give you some perspective on is the market stronger or weakening? Okay, I think we are still maintaining quite well based on market breadth. So as I also mentioned a few weeks ago, I think 2 or 3 weeks ago, the market breadth is at a high over here. Okay, so market breadth, yes, okay, market breadth at a high. Okay, market have a correction is very normal. Okay, you can treat the percentage of stocks for S&P above the 50 days moving average. You can treat it as overbought or oversold level. When you stretch it too high, okay, you mean reverse back down. Stretch it too high, mean reverse back down. Stretch it too low, mean reverse back up. Stretch it too high, mean reverse back down. Okay, so it is normal to have a correction. But what I'm going to show is not this. In fact, I'm going to show you it is this. Okay, percentage of stock above. Okay, percentage of stocks above the 200 days moving average. Okay, 200 days MA. All right. So to keep things simple, okay, you can just use line chart. Okay. So all right. Generally the market still okay out of the S&P 500 stocks, right? About 55%. Okay, 55%, more than 100 plus. It is above the 200 days moving average. That is not too bad, right? All right. And all right, if you compare it to the SPY, all right, so a recap over here. On top here, it is the market breadth, okay, percentage of stocks above the 200 days moving average. Below, okay, is the S&P 500 itself, SPY, okay, SPY. All right, can you see any kind of difference or not between these two charts or not? You check the swing high versus the swing low, okay, and see any difference? Able to see some strength in the market or not? Okay, I'll go through. Okay, can you see over here? On top is the percentage of stock above the 200 days moving average. Below is the S&P 500, right? All right, so can you see that this is the swing low? Okay, the market swing high, swing high, swing high, and a swing high, right? All right, swing high, and this swing high didn't break the swing high over here. Price didn't break the swing high, so it's a lower high. So this is still a lower high, right? But Can you see on the market breadth above the 200-day moving average? Okay, so this was the swing high, swing high, swing high, and price has already broken the previous swing high over here. So all right, so while the S&P itself on the surface is like still looking pretty weak like that, okay, but the market breadth above the 200 days moving average, okay, has broken above this so-called resistance line, the swing high, if you wanted to say so. All right, and previously the market for the percentage of stocks above the 200-day moving average, it also gives you a very good clue, all right, that the market it is not as strong as it is, okay. And while the market until the end of the year 2021 last year until end of the year 2021, okay, while the S&P is still going higher, the market breadth is already telling you that it is not that strong. While the big caps continue to go higher, a lot of the smaller company, they are already below the 200 days moving average. So there is a divergence. You get what I'm trying to say? So beneath the surface, just want to assess, how strong is the market. All right. So this is a bull case. Okay, this is a bull case. All right. All right. So price has already broken above the previous swing high over here. So why I see that market is not as weak as it seems. Okay, so this is the bull case. Okay. Of course, there are, if you want to search for data, there will be bearish case as well. All right. So there are always the bull camps and bear camps. So I'm just presenting you the bull case. Of course, the bear case already presented based on price action. We are generally longer term, we are still in a downtrend. But what I see is that we are not that weak. Okay? We are not that weak. Breadth is still telling us that we are still okay. Okay. All right. Thank you, Kian Wee, and also Paywen updating me. Okay. So if you understand what I'm trying to say on this market breadth, the market breadth thing on the 200 days, just type 200 in the comments. Just type 200 in the comments so that I know you understand what I'm trying to say. So right now, okay, just take a break first. Okay, please give me a like, share, or comment if you enjoy my sharing. You find this sharing useful to you. All right. So once again, just a recap over here. Okay, we have this Market Insights Virtual Summit that's coming up real soon next year, 14 and 15 January 2023. So this is the site that you'll be looking at. So you can pre-register now. Ray Barros is the keynote speaker, a professional trader, fund manager, and author as well. And of course, as I mentioned, right, New Year 2023, a lot of traders, investors, I believe you guys want to know what is the market outlook. So it's a new year, new outlook, new opportunities, and all the speakers, will be sharing with you the trading knowledge and also the market outlook for the year 2023. Of course, we have resident speakers and also new speakers as well. So pre-register now, it is free. Just fill your name, email address, and mobile, and you're good to go. And of course, I'll give you additional bonus material, as I mentioned. Most probably, I will send to you guys next week because December right now, holiday season, a bit, holiday mood. Okay, so give me some time. Okay, and I'll give you that some of the key, seasonals, the key sectors and ETF that you should look out for the first quarter of 2023. So at least know what are the key stocks, ETF to look out for. Okay, all right. So yeah, do register now, and also as I mentioned, right, the Telegram channel, Telegram and YouTube, do subscribe to our YouTube channel as well. Okay, and Telegram, I wish I share with you some time sensitive news and such. Okay, let me post a link in the comments. All right, so yes, so what should I talk about? Okay, I'm gonna talk about this thing over here. All right, so talking about the SPY and TLT also. So right now, I'm not sure about you. You realize that the bonds market have kind of decoupled with the stock market. All right. If you realize that, just type yes in the comment. If you don't realize that, just type no in the comment. The chart over here. Okay, so the I'll just use the TLT, okay, the 20 years, more than 20 years treasury bonds. So previously, if you realize that this year, all right, the equities and the bonds market are, is correlated to each other. Equities down, bonds market also down. Okay, bond market also down. All right, so but right now the treasury bonds, is also, going higher right now. While the stock market, it is kind of, going down. The bond market, it is much stronger. So this kind of relationship, it is back to the normal relationship, okay, where, treasury bonds is acting like a kind of a risk-off environment. When the market is risk-off, the treasury bonds will go up. That kind of price will go up. Of course, if the treasury bond price go up, the yield will come down. So is it the market also telling us that, in the future, the yields are going to come down as well? Okay, I'm not too sure, but at least this is an observation that I see. Okay, the treasury bonds and also the stock market have kind of recently decoupled. Okay, they are not in line together. And if you use the SPY versus the TLT, the ratio, okay, ratio over here, right? You realize that recently the SPY is underperforming the treasury bonds. All right, so you can see this is the ratio SPY stock market ratio versus the TLT. Okay, this is a ratio chart, very simple, SPY/TLT ratio chart. All right, so if you put on trading view, how to read it, very simple. Okay, if SPYs versus TLT, if this is going up, which means that the stock market is outperforming. Coming down, stock market is underperforming. Go up, stock market is outperforming the treasury bonds. Coming down, the stock market is underperforming the treasury bonds. Okay, so this is the so-called, is a very nice trend over here. And if you add in the SPY over here, okay, if you add in the SPY over here, okay, so okay, all right. So do you realize that, every time, okay, when this ratio, okay, hit at the bottom over here, the bottom for this year, all right, it tends to mark a bottom in the equities market. So can you see over here, the ratio is at this channel over here. Okay, this marks the bottom, and then price rebound up. The June, July, bottom, okay, then head back up again. Okay, this is mark the bottom as well. And then in the October bottom, right, this is bottom, and this marks the bottom as well. And right now we are also approaching somewhere near the bottom as well. So does this mean that, this could signal that the bottom is near soon and the equities market will go up like this in the near future? Of course, market don't go up straight like that, can ping pong go up like that. But generally, it could be heading higher up. All right. Understand what I'm trying to say about this? All right, if you can understand, just type yes in the comments. Oh yeah, so about the VVIX, right? Yeah, so the only thing that okay, VVIX, the only thing that I don't like recently is the VVIX ratio, since Payone is asking, right? So there is a divergence. So while for like, while the market SPY, it is going up previously. No, sorry. So yesterday, like 2 days ago, okay, all right. So like this, okay, while the market is going up for the past 2 days, okay, the VVIX ratio, it is actually, coming down, which is this is something that's bothering me a bit, but okay, I think yeah, so that's the reason why I am not so aggressive on equities trade. So this is one of the reasons. So, and of course, heading into next week, CPI triple reaching plus the Fed, everything is coming out. So I'm not so aggressive. So as of now, I only have one position in equities. So yeah, so that's the reason that's bothering me. So yeah, right, Payone. So there's a divergence over here. So so a bit skeptical of the rally over here. Okay, so a bit hard to decipher right now. I'll be totally honest with you. Hard to decipher right now. So the VVIX ratio, VVIX over VIX is showing divergence, but at the same time, okay, the market it is reacting well at the support level that I am, anticipating. So, at one hand, I didn't want to miss out the potential gain, right? So I just, had one equities trade in the market right now. All right, one equities trade. So the one trade that I had, I don't mind sharing now. Okay, so as I mentioned, right, okay, the trade that I do is quite different from usual people, okay. So I will do a scanning and such. Okay, I find some good potential one, then I will trade. So like the Twitter, as I mentioned, right, the trade that I have, one of the trade that I have is this AHCO, 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 AHCO. How is it performing right now? Okay, so it's still not doing not much movement. What I like is that kind of contracting movement. So I'm expecting a kind of a breakout soon. That kind of okay. Anyway, this is one of my just one. And the one that I have is not really equities, but gold miners gold miners. Okay, I have gold miners. Okay, GDX. Okay, yeah, GDX is not too bad today. GDX okay, GDX. Do you consider gold miners as equities or gold? All right, let me know. Do you regard gold miners stocks as gold or stocks or equities? Wei Lun, yes, I was thinking whether I want to go to SMH or not yesterday. Yesterday was pretty good. SMH, yes, yeah. I also watching SMH the semicon, but as I mentioned, like Payone and all this, okay, the VVIX ratio, I'm very skeptical of the market. So I don't want to be aggressively long. So I didn't take on SMH. SMH yesterday was pretty good as well. Okay, I was looking at that. Okay. Hey, nobody answer me. So do you trade gold miners as gold or do you trade gold miners as stocks or equities? So yeah, anyway, these are the two that I have. Okay, GTX and ADCO, okay, Adapt Health, these two only, okay. So again, it can be very stressful. I tell you my actual position, all right, my actual position. So yeah, anyway, it doesn't matter, okay. This is just one position on equities, ADHO, AHCO, Adapt Health, okay, these two only, right. So we'll see how it goes. Stephen said go, William says so, equities. Okay, treat it as go. So if you treat it as stock, then basically I only have two stocks, AHCO and also and GDX. Okay, these two. I am also involved in some forex position, but those are already exited. Okay, all right, and also VIX also exited. All right, and yeah, so the leading sectors industry, right? No change. All right, no change. All right. So financial not too big, not too good this time around. It crashed, right? I think so. Not the best. KRE financial regional banking. Yeah. So price action doesn't warrant a buy. So as I mentioned last week, potentially the VIX could spike. So I actually never really bought into the banking one. Okay. Yeah. The one that I'm looking at is SMH, GDX. So GDX, I have a position already. So I'm still looking at the same thing. Okay. Last week, no change. Okay. Regional banking, this is the defense, semicon, gold miners, and steel. These are still the same things that I'm looking at. No change at all. All right. So I think all in all, I think I basically cover much the things I'm going to cover already. So again, I think next week is the key thing. Okay, next is the key thing. CPI plus the Fed that could make or break the market. So I'm also not too sure whether the VVIX is actually giving us some signal while the market is up nicely today. Okay, the VVIX is still down. So we shall see how it goes. But nonetheless, market, it is reacting at the level that I anticipate that you react. Okay, so it is still reacting right now at this 3960 level. Okay, can it go up? I don't know. Okay, we will see how it goes. All right, and then the VIX I mentioned already. The VIX, we are still in play. We are still in play. This red signal over here, will it continue to spike over here? Okay, I also don't know. Okay, but as of now, I have exited my position in VIX. Okay, all right. I long VIX. So yeah, so we shall see how it pan out. So, and because of that, okay, I don't have a very aggressive long position in equities. So still quite carefully. Okay, so that's what I'm trying to say. So if everything is good, everything is clear, okay, I just type clear in the comments. Just type clear in the comments. Okay. Any questions so far? I think I take on a few questions before I call it a day. All right. So heading into next week, CPI and the Fed meeting, I suggest that don't be so aggressive also lah. Okay, don't be so aggressive because you really don't know what the market will do. Next week potentially, the CPI can come down, but then the market can also come down also. Okay, and then the narrative, the mainstream media will give a reasoning why the market will come down or whatsoever it is. Okay, so hold your horses. Don't be so aggressive. All right. The best is if you can exit before the market open on the 13. Okay, 13 and 14. So basically you just have another 1 to 2 days trading days to hold if you're still holding on to equities position. All right. Ken, if you find this value to you, yeah, some already type value already. Okay, value. Okay, just type value. So Yu Yang, any comments on dollar index? Dollar index, still no change lah. Okay, still no change. I think dollar index is still coming down. Right, it is still coming down. Dollar index, okay, still coming down over here. Still coming down. So if the dollar do continue to come down, that will provide a tailwind for the equities market. Okay, as I mentioned, this year inversely correlated. Okay, inversely correlated. So yeah, I'm looking at price for this month to test out this level over here, which is at about 103.7. Okay, I'm still looking at to test out to hit the level 103.7 over here. All right. So yeah, I'm still expecting the US dollar to go down a little bit further, okay? Go down a little bit further, okay? But do not expect the dollar index to continue to down all the way. There will be, up wave, down wave, up wave, down wave, all right? So once again, if you think that this, statement say narrative always sound like excuses, yes, there is, because the market always need a reason to tell you why something happened, because if not, they have nothing to write, correct or not? Okay, so I think with that, once again, thank you so much. Okay, do subscribe once again. Do subscribe to our Telegram and YouTube channel. Okay, all right, to get the latest updates and news as well. And once again, the Market Insights Virtual Summit, do register as well. Pre-register. Okay, I'll give you the bonus reports most probably next week. If you want to look some of my trade ideas and such, do subscribe to our my personal Twitter channel. And all right, I think with that, just nice, about 1 hour or so, 1 hour, 10 minutes. Okay. So yeah, you guys can go and watch your soccer already. Okay, so thank you so much for staying with me until 12:40 a.m. tonight. So I hope you enjoy the session tonight. Once again, give me a like, share, or comment on Facebook. Okay, if you find this valuable. So with that, I thank you once again. Thank you for staying with me. So have a good weekend ahead. Have a good rest. Have a good weekend and see you again next week. Bye-bye.